Well, in the previous video, we took an interest on how commercial banks work, how they earn their revenues by performing different operations on different segments. But in this video, I'm going to be talking about a part of banking, that arm of banking, which is not noticeable by most of the people, but it's very important in terms of corporate finance, and that's investment banking. Well, as I always mention and will mention, that banks will remain profitable for a very, very long time. Whether it's a lending operation or you can say advisory operation. Now, taking a note on advisory, I hope you understand what I'm talking about. And that's investment banking operation. Now I'm going to take you down to the history of investment banking. Well, back in old time, there was a construction owner who was trying to build and work on a particular infrastructure that could reshape the entire construction business. Now the thing was that there was no financing available back then. People or investors couldn't find a way to invest in that particular project without knowing the details in and out of that project. Leave aside negotiation, that's a far talk. And one day, luckily, he met an investment banker and he asked him, he said him, "What should I do? I'm building the best project, the best model, but nobody's there to finance it. I couldn't get any financing from anybody, not from individual investors, not from institutions. So should I give up on my project? So should I consider taking money from government and making one of those government banks as a trustee or a guarantor so that people could find a way to invest in my project and have a sense of safety or trust? What should I do?" And I'm not kidding. The banker literally said him, "You just go enjoy and build your prototype. Leave the rest of the work with me. Just send me the basic details like how many acres of land you'll be covering and how many employees you're expecting to work under your project as a dollar-to-dollar basis. I'll find the best investors for your project." And that's where it all started. Now going fast forward in today's age, you'll see that all the corporate things, majority of corporate things are solved by investment banking. They are covered by investment bankers by taking negotiation on a side basis, but most importantly, to get the job done. And I'm sure you must have heard about the term named stock market. And if you look, who made it possible for a private company to raise funds from general public other than having a contract with venture capitalists? Investment banks, they did it. Who made it possible for private companies to quadruple their valuation by taking a large amount of volume? Investment banks. Who made it possible for promoter stock dilution and general public's appreciation? Investment banks. Who can send the power of attorney to online brokerages and having that sense of entitlement to buy or sell that particular security on our behalf? Investment banks. They are the backbone of this stock market and all the stock exchanges. And you know who gives the obligation to underwrite a follow-on public offer, FPO? Investment banks. And we experienced that a couple of weeks back with Yes Bank. Yes Bank was considered one of the largest private sector banks in India, but they had a little falling out in their mortgage business, which eventually collapsed the bank with a large number of NPAs, non-performing assets. But that's not important. What's important is that they needed to raise cash, they needed to raise funds urgently, and the only way to raise funds was through capital markets, general public, because no private investor was in a condition to risk that big amount in that particular bank. So Yes Bank took a corporate action by issuing Yes Bank stock at 12 rupees. So big institutions can buy millions of shares. So let's take for instance retail investors. They could buy thousands, tens of thousands of shares. So let's say if a retail investor has bought 10,000 shares of Yes Bank, that's about 1.2 lakh in his portfolio. And let's say if that company, if that particular bank recovers, because the motto is simple, if the company does well, stock follows. Let's say if the Yes Bank stock goes to 110, then that person is multiplying his money with a factor of 9. So that's the beauty. And even if you look in the government, they don't have proper expertise to issue bonds, government bonds, or you can say government debt. They use investment bankers and they play their part by having a negotiation on a side basis, but more importantly, have a proper valuation of that particular security. So I hope you understand and you are aware about how investment banking is a vital entity in companies' needs. So I'll take a break from here. I'll be back with a new video on revenue base, on banks, on investment banking arm. Till then, subscribe to my channel. There's more content coming up.